Good morning. Welcome to the Clubhouse Insider, Monday, October 6th, 2025. So we're officially in Q3. So what's going to happen? What are we looking for here, in the markets and just expectations so we can help ourselves plan for the rest of the year, especially if you're looking to refinance. So mortgage rates are holding near 10-month lows. So you can kind of see right here in this chart, this is last month, August to October here. We've had some bad news. We've had rise in rates, but overall it's still on the way down. And really, look at this here. It's trying to come down again. So these are conventional rates, of course, I like to show. But it's been really pretty quiet on the trading front. The jobs report is what we were all looking forward to on Friday. That was going to help us or hurt us, right? So it could go either way when that data comes out, because that's what the Fed's looking for, is data. They've said it a million times. But instead of that being a headline market mover, it's been delayed due to the federal government shutdown. So other things in the government, with the government shutdown affecting loans, things like FHA loan, not FHA, USDA loans, they're not being originated right now. FHA, VA, conventional, pretty much business as usual. But with no fresh data on the labor front to digest, the market is leaning harder on Fed and their minutes, which means every time they get together and talk, right, the notes that come out of their meetings. They have a meeting here on Wednesday, so the market's going to be looking for hints about future rate cuts, inflation concerns, or anything at all that they can react on. Because as a reminder, rates don't just fall because of Fed cuts. They fall when the market expects future cuts. So the last few cuts were evidence of this. We watched rates dip right before the Fed acted, then actually rise after the actual thing that we were waiting on, the cut, happened. So waiting on headlines usually means reacting a little bit too late. So let's take a look here real quick. This is a year. So like I said, 10-month lows. So we're right here, right? 12-month lows were just before the cut. And here we are at 10-month lows. You can take a look here at the averages, still under 6.5 for the most part. But again, these are averages. So 6.3, do not be shocked if you get a 6.5% rate quote on a 30-year fixed. So these averages they're taking the best, and then the worst. So you're going to fall somewhere in the middle. But the good news is there are some fives still on the board, 15 years. FHA and VA really, really close to cracking into those fives. Then we've got ARM products making a huge comeback. You're seeing some fives on those as well. So 10-year Treasury, this is the thing we're all watching. These are the trading that you can watch in the markets that's most closely related to mortgages. So if we want to see some rates in the fives, then we need to see a 3 here on this 10-year Treasury note. So with that, one thing to highlight, again, the broker advantage. This kind of uncertainty is where having a broker like me actually gives you a huge edge. We don't guess and hope. We lean on decades of experience and the direct resources we're giving as a broker. We're working with the actual market people. We're working with the folks that put the rates into place within the lenders, right, of the big wholesale lenders. And we're not an order taking call center. So we have the ability to shop multiple wholesale lenders. We have fewer overlays. We can structure credits and those concessions a lot more efficiently. We can help you time your lock based on market signals rather than just panic or hype. So if you're buying or considering a refinance, let's build your plan now, proactively, rather than before the market reacts all at once. So have a great week, and let us know if we can do anything to help you.